We're not looking to decouple from China. We're looking to de-risk and diversify.
China is banning major firms from buying products from the chip giant, saying they pose a national security risk. This ban comes less than 2 months after Beijing announced an investigation on imports from Micron.
Beijing saying that it's discovered some relatively serious security issues with Micron Chips, banning the sale to major infrastructure providers.
And I think everyone should be prepared for rates going higher from here. You know, if 5% is not enough, the Fed doesn't control the 5 or 10-year rate. They control the overnight rate.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion.
Today we'll explore the intricate dynamics between China and the US, as President Biden emphasizes a desire to maintain interconnectedness while China imposes a ban on the Micron chips, citing national security concerns. Shifting our focus on Japan, we'll examine an optimistic outlook on its economy, with CLSA predicting faster growth compared to the US and Europe. JPMorgan's Jamie Dimon advised on being prepared for higher interest rates. Finally, looking at a recent meeting between Republican leader Kevin McCarthy and President Biden, where discussions were productive, but an agreement on the debt ceiling has yet to be reached.
Now, we're also united in our approach to the People's Republic of China. And the joint statement released yesterday outlines the shared principles we've all agreed to at the G7 and beyond dealing with China. We're not looking to decouple from China. We're looking to de-risk and diversify our relationship with China.
But soon afterwards, Beijing announced an effective ban on U.S. memory chip giant Micron.
The Micron action by China is basically a retaliation for earlier sanctions that the U.S. put on Chinese access to advanced semiconductors and semiconductor production equipment coming out of the U.S. When you transform a supply chain dependence through the principles of diversification away from China, at a minimum, that's a partial decoupling. And splitting hairs, as diplomats always want to do in these difficult conflicts and other situations, doesn't really get away from the bottom line that we are leading a Western push away from China. This conflict is, to boil it down to a simple word, very stagflationary, lower output, higher inflation. And we can't pretend that we can engage in conflict with a nation that has been, for a long time, our primary offshore supplier and not face up to the consequences of what that conflict entailed.
And you see that it sent shares of Micron down more than 3% right now. Micron has since responded in a statement to Yahoo Finance, saying, while they have received this notice here, they're evaluating the CAC's conclusion and assessing their next steps. Micron going on to say, we look forward to continuing to engage in discussions with Chinese authorities. What does this all mean for Micron's bottom line? Well, about 10% of their revenue came from China. And it's important to note the ban today is not an outright ban. It's still specifically about key infrastructure projects. We're talking last year about $3.3 billion in revenue coming out of China. We have heard from Micron CFO Mark Murphy this morning saying he believes the impact will be in the low single-digit percentage of the company's total revenue at the low end and high single-digit percentage of the total company revenue at the high end.
Beijing saying that it's discovered some relatively serious security issues with Micron Chips, banning the sale to major infrastructure providers. We don't have the specific details of what security concerns Beijing authorities did discover. We also do not have exactly which chips produced by Micron will be barred. Micron makes memory chips that do not run software, they don't run code, and so usually they are not considered a security threat. This is why there is such a suspicion that this is mainly a geopolitical move more than it is a technical or security one. We had the Chinese foreign minister meet with the American ambassador here in Beijing. There was also that meeting between Jake Sullivan, the national security advisor, and Wang Yi, the top diplomat on China's side. And so there does seem to be actions building towards the call that we know that the Biden administration has wanted to have between President Biden and President Xi. There's also been an attempt to set up a meeting between the Defense Secretary Austin and China's Defense Minister in Singapore. President Biden's suggesting at the G7 that maybe the United States may remove sanctions on the Chinese Defense Minister to pave the way for that meeting to happen. So there does seem to be things happening.
You're already seeing credit tightening up because, the easiest way for a bank to retain capital is not to make the next loan. So I think you are going to see that. And I think everyone should be prepared for rates going higher from here. That if 5% is not enough in Fed funds, and I've been advising this to clients and banks, you should be prepared for 6, 7. You should be prepared for on the 10-year bond. And I also feel this way. The Fed doesn't control the 5 or 10-year rate. They control the overnight rate. So while they've been raising the overnight rate, there's still too much liquidity in the system, which is why stocks are high, bond spreads are still, you all talk about recession, not if reflected in bond spreads. So I think there's a chance you can have rates ticking up, and not to 3.78. I'm talking about 4.25, 4.5, 5, 6, hell, maybe even 7. I would be prepared for higher rates if I were someone. Whether it happens or not, we don't know, but you should be prepared for it.
What happens is the first meetings weren't all that progressive. The second ones were. The third one was. And then what happens is the carriers go back to the principals and say, this is what we're thinking about. And then people put down new claims. I still believe we'll be able to avoid a default and we'll get something decent done.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about. So.
Do Americans need to do anything to prepare for the potential of default? There are a lot of people worried about what could happen to their jobs, their savings, and so forth. Do Americans need to get ready for that?
No, because the Republicans had passed a bill that raised the debt ceiling that's sitting in the Senate. You always have the ability to move that. There's always opportunity.
Yes. 2 questions. 1, how would you describe the tone of the conversation tonight between you and the president?
I think the tone tonight was better than any other time we've had discussions. I'll have Chairman Patrick McHenry come up and talk a little bit about that as well, but I felt it was productive because, look, we both know, we've walked through this for a long time, where our differences, we're explaining them, we're giving a give and take of what we think would be best for moving the country forward. We still will have some philosophical differences, but I felt it was productive in that manner, in the manner in which we produced, and I think we were able to really focus on the areas that's different.
You called it productive, but are you confident that you can get a deal with enough time left to prevent Americans from feeling the economic pain here?
Look, the thing I want to tell America, I never wanted to be here. I do not like the idea that you govern by chaos, you govern by a deadline. So all the way back in January, I requested meetings with the president after I won Speaker, only on this issue. We always knew this issue was coming. February 1st, I got that meeting, and I sat with the president, and I told him, Mr. President, we should work together to find where we could have common ground to raise the debt ceiling, but curve our spending so we stop doing this. And I told the president, there's only 2 things. Not going to raise taxes, and we're not going to pass a clean debt ceiling. But for 97 days, he said he wouldn't meet with me. And now, what the Republicans went and did in the House, we passed a bill that raised the debt ceiling, saved us money, put us on a trajectory where we could go to balance. This was long before Secretary Yellen told us the deadline was June 1st, because we don't want to govern that way. Unfortunately, denying our ability to meet put us in this situation. I believe we can still get there. I believe we can get it done. Look, I've watched us work before. I think from this discussion, he knows where we are. We had greater explanation of, he had to be at G7 while our staffs were meeting. We were able to explain where some positions they have. I think that was a better explanation for both sides.
As Japan reopens after the pandemic, its service sector is driving employment higher. It started with a tight labour market because of demographics. And although there's a lot of talk about the shunto and manufacturing wages and government policy, what really excites me is that service sector wages are starting to move, and that's important for breadth. Now, whether or not that's permanent, I don't know. It should, though, last this year. It should, though, last next year.
So when do you think the BOJ would normalize policy then, Eric?
All we know is that they're reviewing the policy framework, and that will take 12 months to 18 months. I think at the end of that process, I hope they abandon yield curve control, because I don't think it's a very good policy in terms of flexibility. But until we get those big reports, I think you're going to see policy left unchanged.